Hello and welcome to an FXTimes daily market recap. I'm your market analyst, Nick Nassad. Today is Wednesday, February 24th, 2010. Following a surge in favor of the greenback and yen in Tuesday's global session as a result of higher risk aversion, today we saw a bit of consolidation as the greenback gave up some of those gains from yesterday's session. Traders awaited testimony from Fed Chairman Bernanke in today's session, in which he reiterated that the Fed will keep interest rates low for an extended period of time. That helped equities in the US to climb higher in the New York morning, which boosted the euro and other higher yielders in the New York morning session. Though we did have a piece of poor fundamental data from the US in that the pace of new home sales in January fell to a record low. In Bernanke's testimony, he said that the U.S. economy still needs record low interest rates for several months at least, because the recovery from its deep recession is expected to be slow. He said that the strong growth in the latter half of 2009 was fueled by temporary factors, and that the Fed expects the economy to expand by between 3% and 3.5% in 2010. The testimony was largely as expected, and the Fed chairman said that traders and investors should look to the interest rate charged on bank reserves as the Fed's key exit strategy tool. By increasing the interest rates on reserve, the Federal Reserve will be able to put significant upward pressure on all short-term interest rates. He also said that last week's increase in the emergency lending rate to banks, or the discount rate, shouldn't mean wider borrowing costs for consumers and companies. Following the testimony, U.S. equities did rise about 1%. The major indexes were all up about 1%, as the markets do not anticipate any major steps to raise rates this year. So while yesterday we were in risk aversion mode, which favored the greenback against the euro, today, following the Bernanke testimony, we saw the pair cut into some of its losses in yesterday's session. However, following a test of 1.3625, we rather quickly paired the gains we saw from today, which could mean an extension of the decline in the euro. There were public sector strikes in Greece, Spain, and Portugal over budget cuts, so that once again puts the spotlight on the debt woes of the eurozone, which has been pressuring the euro the last several months. So right now it's important to watch what happens if this pair reaches the 1.35 level, as that could be a key point of psychological support for the pair. In a blow to the U.S. housing market, new home sales unexpectedly plunged in January, sliding 11.2% on the month compared to December, and falling to a record low seasonally adjusted annual rate of 309,000. Those records go back to 1963. As you can see from the chart to the right, new home sales have been sliding the last 7 months or so after we reached a high around August of 2009. You could see the overall trend was a sharp slide in new home sales throughout 2007 and 2008, a bit of a rebound in the first half of 2009, but now again we're seeing the declining trend continue. So this could cast a shadow on the housing sector, and we'll have to see how sales develop in the next couple of months. In a look at the dollar yen, we see that we had relatively sideways trading during today's session, though we did hit a new low for the week at 89.75 in the wake of the new home sales and Bernanke testimony. That ran up against support from last week that you could see here on the green line. Taking a look at a commodity currency, which is also linked to global growth prospects, the US dollar Canadian dollar pair, we see that following yesterday's sharp rally in favor of the greenback, as we had some poor economic data casting some doubts about the global recovery, today the Canadian dollar managed to pair some of those yesterday losses, testing the 1.05 area in the New York session. That was about a 38.2% Fibonacci retracement, so a very shallow correction so far. Currently, currency markets are moving as a result of risk sentiment, so we'll have to see where sentiment goes the rest of this week. So we'll see if Bernanke's nod to low interest rates will help risk appetite going forward this week. The pound-dollar pair traded rather choppily in today's session, moving sideways throughout most of the session, though it was down in favor of the greenback by 2 p.m. Eastern Standard Time. This is quite reminiscent of a consolidation zone right now, and the moving average, our 50-period moving average, did hold as resistance. So our obvious level of support is right now at 1.54, and we'll see what happens with this pair next. Resistance for a short term, again, it would be this level we reached in today's session around 1.4575. So we have a pretty well established sideways channel, and we'll monitor to see whether we break below or above our support or resistance levels. Now let's take a look at the upcoming fundamental docket. Tonight at 6 p.m. Eastern, Australia posts its leading index, which is followed at 7:30 p.m. by its quarterly private new capital expenditure figures. That's an important release meant to measure business spending. At 9 p.m., New Zealand posts a measure of business confidence. And then turning to overnight, we will get Germany's unemployment change and unemployment rate, as well as Eurozone money supply and private loans figures. At 4:30, the UK posts its business investment for the fourth quarter, and Bank of England Governor Mervyn King testifies in front of Parliament. At 7:45, the UK CBI will post its retail trade survey. Fundamental data from the U.S. tomorrow, we will get a look at durable goods orders, weekly jobless claims, and a measure of housing prices. Also, Fed Chairman Bernanke will spend his second day on Congress as this time he testifies in front of the Senate. And that'll do it for today's broadcast. For more news, videos, and analysis, please visit our site fxtimes.com. I want to thank you for watching and wish you good trading.